Check, check. 1, 2. All right, guys. It's about that time now. Let's take a look. So we have here the SPY daily candles. Let's just take a look here. We're gonna actually go to the 5 minutes first to go over what happened today. We had a beautiful channel here. Beautiful channel, regression channel here that developed. And let's zoom in into this area. And we can see how beautiful this situation is. Look at that. Learning to use the YouTube. All right. So we had a channel here, regression channel, beautiful. You would have known that we had a bottom here. Hit the top, come back down, bottom of the channel. Attempted the middle, failed. Attempted again, new low, and then all of a sudden, finished the day. You guys see this wick, right? We keep seeing these long wicks every time that the day ends. So we have another one today that expands all the way to the 437.55. Will we see that tomorrow or not? But just keep that in mind. That line is for some reason I'm gonna leave it like with this blue line here, so it's enough for me to keep in mind that there was a wick there that I'll be seeing tomorrow. So for those that are bullish, let's take a look at the daily candles here for the yearly, for the 1 year 1 day candles. We can see that we have a still a bearish momentum. We're still making lower highs. So this was the higher point. We got a lower high, another lower high, another lower high, and then here's like maybe we got a higher than this point, but we don't really have a higher altogether. So you're still making lower highs. Now the question is this: everybody was saying, "Oh no, we're gonna keep pushing. Let's get rid of that channel now. We're gonna keep pushing because XYZ." Now, my thing here is this: I had a feeling that a drop was coming. Why? Because we have 1, 2, 3, 4, 5, 6, 7, 8, 9 days straight going up. So you're gonna tell me that after going up 9 days straight, you're not gonna have at least one red day? Now, this red day pushed back into that channel. So now let's look. How does the channel look now? I can tell you this right now. I can tell you that the volume for the past 3 days on here has been very kind of flat. If I'm gonna be fair, take it flat right there, but you can see that is diminishing in the past few days. That means that on the push up on the last 3 days, the volume was dying off. Guess when the volume picked up? On the red day. Right here is when the volume finally picked up. Now let's get rid of this line, otherwise I end up with a bunch of lines. So let's start zooming in. So we go to 180 days and we start zooming in. Look where we are. In 180 days, we already broke below that channel of support that we had here. It was a nice channel that you go up, down, and you were using this bottom green line as a support. But then we ended up extending above it because the rally was so straight up, straight up, that it was so easy to pull away from the channel. Now we are back into the channel again. Now the next question is, do we bounce from here? Well, let's see. Let's see if we can bounce from here. You are trading below the 20. You have the 40 that is now flattening, and it seems that the 40 wants to it's going to be tested. It hasn't been tested just yet, but it will be tested. So do we go up here? Do we go up and tag that green line again? And if that's the case, that would mean that we go up here at 437.15. Do we tag up to 437.15 one more time, or do we simply start hitting lower and go hit the 20 moving average? So if I go to the 1 hour chart, and the 1 hour chart, look what we have here. We have support at the 150 moving average. So we stop right there, 150 moving average. Now tomorrow, if you lose support, I would pay attention tomorrow at the hourly. If tomorrow you lose support at the 150 moving average, guess where we're going? The drop is going to be all the way down here to 430.94. Oh, that sounds like a lot. I don't think it's going to drop that much. Well, we will see. Does it have to do it all in one day? No. It's tomorrow's Friday, so expirations of options and all that stuff that can move prices around. But in the meantime, this is what is in front of us now. If you, for the bullish scenario, you had this line, that line right there. With this line, I'm gonna make it. I'm gonna make that line just a different color, just so we can see. Let's make that line yellow, just so we can see. Okay, so line is yellow, and now I'm gonna start zooming in here. So then we have here, what do we have? We have support, all pre-market, pushed above it, came back down, support again, right? We are at support. Now the question is, does this support fail? Or did it actually already fail? So the support already failed actually. After hours, you are trying to go hit that line again, but it's not budging as of yet. It has not. So what do? I set up alarms here, I set up alarms here, I set up alarms there, and then I keep going down and I set up alarms to the new lows and all that stuff. Now, if you look at the SPX, now we can see the bigger picture, the clearer picture here. We're gonna go now to the 1 day candles, right? So 1 day candles, it's pretty clear. It's you know, it's almost like we just don't want to see it. If you were bullish for today, you just didn't want to see what's in front of you, because not only did we have all those days pushing upwards that I told you, but we also had, look, possibility of coming. Where did it go to? It went down to the 50 moving average. 50 moving average. Oh wow, crazy, isn't it? SPX 1 year, 1 day, we went to touch the 50 moving average. Okay. Now, if you look at the SPY, for those that don't look at the SPX, then you should. You are at the 50 moving average. Now, when do things get bullish? When we cross the 50 moving average. Does that support hold tomorrow? That is a great question. If that support does not hold, guess where we're gonna go? We're gonna go lower. I'll tell you what, if that breaks, we break out of this green channel, regression channel that goes straight up, and we're gonna head down to the 20 moving average, to the purple line. What a surprise. Back to the purple line, 430.47. And if that fails, you go down a little bit lower to 428.62. Now, do I think that we get a major pullback here? I don't. I don't think we get a major pullback, but I am thinking that we can get something along the lines of this. For example, if I grab a line here and I bring it across like that, I'm expecting a drop down here to that line, which correlates with the cross of this line as well. That blue line, the one I just clicked, blue line. So if I intersect those two, I end up with 426.12. 426.12. Now, if you ask any bull right now, they're going to say, that's bullshit. 426.12. We're not going to see 426.12. Well, keep that number in mind and see if we go touch it. Now, for other people, let's go look at the SPX. For other people, what they're expecting is that we go here, right there, right there. Why? Well, that kind of makes sense, because you have, look at this, support here, beautiful support. You had a resistance here, support again, and then resistance. And once it resisted, it was pretty big, so we went dropping. Now, guess what? We came up to it, up to the line. Not perfect, but that line could be adjusted a little bit. But that red line right here, this one right there that I just put, is it's a very important line because it's acting as a support and a resistance. Now, why wouldn't we be able to drop all the way down here, Why wouldn't we? Why can't we go down here to 1, 2, 3, 4, 5 days, or maybe 2 down, 2 up, 1 down, 3, 2 up and 3 down, whichever way you want to look at it. There is a chance, there is a very valid chance that we go down here again, 4, 2, 3, 6. Now, don't discard that just because, oh no, there's no way that's going to happen. You should be thinking about it. We talked about it the other day. RSI at extremes. At extremes, we pull back. And that's what happened. So RSI at extremes, right here, I showed you. RSI at extremes. We pull back. At extremes, we pull back. So here we are at extremes. The extreme number is 59.92 to be exact. So yes, there is a chance. There is still a chance that we can go and do that. Okay, so many people are saying, "Oh, that's not gonna happen. That's gonna happen." I think eventually we go to this dot. I think we're gonna go there. But before we go there, I have to move it around. But before we go there, I think we come down here. How much of a pullback? I don't think that we get all the way down here. But if you ask me, and I can shorten this. Oh, if I can shorten this. It's more like that. It's more like that. That's the pullback that I'm looking for. Honestly, if this pulls back here, I can still make the case because look what I have here. I can still make my case. I have a line. Now, let me erase this one. Now I have a line that is pretty much intersecting all these candles. It worked as a support over here, a resistance here, and then look at it. It bounced right from it, right very close to it. I could probably adjust it, but just to be clear, it does match with this red line coming down. And it matches with this line here, and it's right above the 200 moving average. So to make things make a little bit of sense, I would think if I'm a market maker and I want to confuse the crap out of everybody, I'm going to give you 2, 3, 4 red days, because now if I'm going to push this market at the end of the year, I need you to believe that I'm about to drop it. So I cannot if I don't give enough bearishness now, nobody's going to believe me. But I think this time he's going to trick everybody, because the MACD here is now cooling off. We are at extreme. So yes, everything seems that we are in the way of pulling back. So we should pull back all the way down here. Now, if you want to make things more interesting, you go to the second line that I told you. And at that time, I think you're going to find more bullishness. No, don't be surprised if you find this market dropping below the 200 again, to scare everybody up. Because then if you drop us back to below the 200 and you go to close this gap right here, if you put us back here, if you put us here at this line, everybody is gonna freak out and they're gonna say, shit, cancel the Santa rally, cancel it, no more. And then what they're gonna do is they're going to start going short, and they're going to start growing their short positions. And at that point, he's going to do another one of these face rippers. And this time he's going to break through the blue line because we are at a higher point. And we're going to do something like this. If we end up dropping here, if we end up dropping there, or even lower, and all of a sudden, he's going to do this. Boom. So if it does that, we're going to hit the mark that I'm looking for. That's the mark that I think that's where the market is going. Okay, but at that point, you get your rally. Okay, you get your rally. You still get your lower high from the top. So the bears are not gonna freak out. They're gonna say, well, that's great. You had your rally. Now I'm gonna short, because you're still making lower highs from this point. So I don't care what you do, but as long as you don't get to a new high, then we'll continue to short. And so that makes the most sense for me. Will it happen that way? We will see. But at least I can tell you what I'm seeing, right? So, okay. Now, let's do something. Get rid of this line. Get rid of that line. And let's go draw a Fibonacci. Let's see what happens. If you grab a fib at drawing, fib retracements, and you grab that and you put it, you can use the very top of this move, or oops, I put it backwards. You can use this point and this point, or you can use the very top, right? But if you're just trying to aim at this point, let's just do that first. So let's do that first. Oh, big freaking doom 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 doom. I'm used to drawing regression channels, so fib retracements. If I did that, and then it makes sense that we would pull back here to 23.6 first. It would make sense that we pull back here first. So yes, if you break below the 50, things get more bearish. If you hold the 50, you push up against the line. You go up here once more. If we hit that line, we already talked about the number. So we go up here, maybe do something like this. If there's too many puts tomorrow, then he can go up here again, close the day there, and then still give you next week, give you maybe a gap down, gap and go, and put you below the 50 and start heading that direction. That's a possibility. And then come here and bounce off the Fibonacci 23.6%. That's a chance. Or how about we drop to the next one, 38.2% Fibonacci, which happens to be the area that we were talking about, right? Or just a little bit higher, because here's my line. Here's my line, right? I'm going to remove it now. And so, but Fibonacci is right there. And then it could be adjusted a little bit too, right there. And I'm eliminating the wick just to eliminate noise, but you can do it both ways. So so now the next fib is 50%, and look at 50%, we are in the middle of the gap. Now the next level that I was telling you is 61.8%, which you end up making a head and shoulders. So you got the head and you got the shoulders. This would be 61.8%. So you have the whole, that whole group of things that I explained to you, and they kind of match the Fibonacci's as well. So now I'm going to erase. Okay, that's that. Let's look at the NASDAQ, NDX. Okay, promise to be faster this time. NDX, okay. What do we have going on here? Same situation. We are making what it seems to be the same pattern as that we have on SPY. You have a shoulder here and a shoulder here and a head here, right? So then what's going to happen? What do we go? Right here. I think that's where we're going. I think that's where we're going. Now, do I think that we're going to come down here and collapse? I do not. I do not. I think that things are about to start moving upwards because there is a 2040 about to cross. Now, remember last time that we had a 2040 about to cross right here. It actually never crossed, and we ended up getting a wave down. Now, do we get a wave down? And is this the beginning of the wave down? It could be. Last time it reacted like that, and we didn't even have this much extension on the MACD. So again, same situation. Every time we get to these levels, things start pulling back. Now, the one makes the most sense is that we go here. The yellow line and bounce is one option. My best option is down to the 50. You see that blue line right here, down to the 50 moving average, right there, and bounce, or next step right here, which is that's my goal. That's what I think we're going, right to the blue line. And at that blue line, you end up making the pattern in a kind of like a slanted form. I'm gonna draw it, but you can see it right there, kind of like that. And if I lower it, it's gonna be right over the blue line, right? So you get the idea. It's gonna be shoulder, head, shoulder, but it's gonna come right here to complete the pattern. It'll be like a slanted type form. So so that's what I'm looking for on there. That's what I'm looking for on the SPY, and this is what I'm looking for on the Dow Jones. It's same situation. Look what it's forming. It's forming the same thing. It's the same thing. Shoulder, head, shoulder. Now, the thing about the Dow Jones is that we are trading below the below this channel. This was a bullish channel, was going up, down, you get it, you get that. But here we broke below, and do we remount, or do we get rejected one more time and go retest the 200 moving average, which we haven't yet? So if we can retest this line right here, that 200 moving average, then at that point we're gonna hit this. I think in there it will find its bottom, and this will give you a higher low because this point is higher than this point. So there's your higher low. So I believe that one more wave down touches the 200 moving average, gives you your low, your higher low, and you start pushing upwards again. Now one more thing to match things up. Last one, VIX. The VIX, look what the VIX is doing. On the weekly chart, the VIX is finding a support. And I told you guys about this yellow line multiple times. This yellow line, I said if we remount the yellow line, things are gonna start turning the other way. Now, what I think here is gonna happen is that we're gonna get another push up here, up to the 20 moving average and 40 moving average. One is at 16.8, the other one is at 17.5, and the 50 is at 17.7. So I think that if we can get a push here up to the 50 moving average, we get the pullback that we want. And not that we want, because some of you are bullish and some of you wish things just keeps ripping up, and that is why the market is pulling back. Many people are getting bullish. Everybody's talking about the end of the year rally. So when everybody talks about it, it's not a good thing. Okay, so let's see what we're doing here. We are doing, if this plays out, we are doing this. We are doing that. And last time we did that, I'll show you. It's right here. Just perfect example. You see this? We had this situation. It came down to it and then ripped up higher. It came down to it, ripped up higher. Here is doing the same thing. It left, came back, right back to its means. Now you're back at the yellow line. If you find support at the yellow line, remember, we found support here and we ended up ripping to the 150. But that 150 was higher from the yellow line. This time it's lower. That means it's easier to break it. If it's easier to break it, it's got more potential to break above the other indicators. And if it does, you get a bigger, stronger push. Now, who are we to discard a push all the way from here to here? Why not? It is very possible. You still get a mini meltdown on the markets and you still get your bounce, because if you end up stretching that rubber band that way, it's gonna push this way next, and then things will make sense. It will look just like this one. It will look just like that one. So if you zoom out, you'll see the overall picture. Oops, not that much. Now here it is. Bingo. 3-year 1 week chart gives you a beautiful picture, and it tells you that we are in a channel that every time we touch the top of the channel we come back down, and every time we touch the bottom we bounce. So look, top, rejection, rejection again, support, rejection again, support, rejection again, support, bottom, dragged. Are we complete here? We're not. We never completed this pattern, and we've been completing it over and over for the past 3 years. So who are we to discard the fact that there's a chance that we're gonna push hard here, mini meltdown, come down, come up here 17.7, even higher, and wick right out of it, and then there's your rally, end of the year rally, right at the end. Look, right at the end. When? December, at the end of December. December second, third week of December, you can start getting your rally. And so that is what I'm looking at. All right, so that is it. I think I covered everything. You guys, let's take a look at the futures. What are the futures doing right now? Futures are on the 5 minutes, not doing a whole lot. Not doing a whole lot. And again, whatever it does here, it doesn't matter. In the morning, you see how things move around. But my point is that at this point, we should be looking at the overall picture, the bigger picture. Zoom out a little bit. Make a plan. Stick to your plan. If you think things are going to go up and you think I'm completely wrong, by all means, go ahead and buy stocks, buy calls, whatever you want. TQQQ, whatever you want. Peace.